I'll give you the difference between the stock market and the crypto market, the differences, the pros and cons, why you should invest in either or. And no, I won't be specifically mentioning ticker symbols or giving you instances of what to invest in or buy this or buy that. No, this is not that kind of video. We would lay the foundations which you can make decisions based on that assessments. So every single thing is hinged upon you. In this video, I assume you should have basic knowledge of the stock market. I do not want to go over terminologies, things like ticker symbol or what a brokerage is. I cover that in my previous video. There's a stock market playlist which goes from zero to hero. Every single thing you need to know about the stock market, from what a ticker symbol is, the various kind of ticker symbols, the NASDAQ, the NYSCE, which stands for the New York Stock Exchange. So every single thing that used to seem like advanced or professionals, in that video you would understand those are just fancy words to make you sound smart. For instance, a ticker symbol is a unique piece of letter used to identify a publicly traded share. So Tesla is TSLA. If you want to purchase shares in Tesla, the unique ticker symbol is what was previously stated. So the stock market is a place where publicly traded companies list their shares, inviting the public to subscribe. So you get access to shares via a brokerage. A brokerage is like an intermediary between you and the company. For instance, if I want to buy shares in Tesla, I cannot go give money to Elon. At least not everybody can do that. Maybe me, but not everybody can do it. A brokerage serves as that intermediary between you and Elon. Again, this is not highlighting what you should invest in. This is not trying to tell you buy this or do this. No, this is purely for illustration purposes. But the stock market, before we go over the advantages, let's elaborate on the stock market. So once you buy a share in Tesla, you can say, I own Tesla. Technically, you're not wrong. But to the degree in which you own it is proportional to your opinions being valid or heard. Because someone with multiple your shares can come along and his opinions will worth more than yours. $100,000 shareholder is more valuable than a 2 shareholder, and a million shareholder is more valuable than the former. So every single thing is technically, or all of them are technically owners, but to the degree in which they own the company is proportional to their influence. Now that's out of the way. One of the advantages of the stock market is its value is hinged on something concrete. So once you invest in Tesla, you can see the various activities going on in the factory. You can see the various offshoots as a consequence of that deal. There are Tesla Model X, there's the Cybertruck. You can see the various offshoots of the company. I'm trying as much as possible not to juxtapose amidst conversation. Like once I give an advantage of stocks, I immediately contrast to crypto. But I'll make an exception. Crypto, for instance, isn't hinged on anything concrete. So if Bitcoin goes to $0, there's nothing, there's no CEO behind it, you have no idea who to hold, all of those factors come into play. So crypto is at your own risk. Those who have experience, especially in the stock market, would nod their head in a negative way, because there are companies of which you invest in file for bankruptcy and you lose all of your money. Those cases do exist. I'm not trying to downplay it. But in the process of filing for bankruptcy, every single store, all of the concrete items will be sold to offset its liabilities. So once the big banks and every single person is done taking a piece out of, I'm looking, trying to recall the official term of the finance received from the sale of bankruptcy. I forgot. That's very unusual. But once all the liability has been offsetted, the balance is used to pay the shareholders. So the shareholders get paid last. And even in that shareholders, there are various kinds of shareholders. And the kind of shareholder you are determine the time or at the frequency you get paid. So there's preferred shareholders, there's deferred shareholders. So it goes deeper than you can imagine. And of course, at the infancy of your investment career, you need not concern yourself with the intricacies of the stock market. And this is the problem with people about to do something, anything at all. They're trying to get as intricate as possible, trying to be meticulous and control every single factor. But investing is like dieting. If you want to diet, start with the basics, which is jog. If you're trying to lose weight, why don't you start by stop stuffing donuts in your mouth? Stop doing things that make you fat. Go for a run. Walk X amount of miles. Start being consistent with the basic activity before you engage in things like dieting and trying to be strict with your nutrients or trying to hire a coach. It depends on where you are in life. Guess what? The average peasant can afford a coach. So the best thing you can do is what was listed, not trying to wait till you're profitable enough to engage in the intricacies. So if you extrapolate it to the stock market, trying to understand what a deferred shareholder is, a preferred shareholder, before you start investing, you want to understand every single thing. It's a great ambition, it's a great desire, but knowledge is infinite. Start where you stand. More tools will be found along the way. It's in the process of beginning. Once you come across the pathway where your knowledge is insufficient, you now have the opportunity to go hunt for that knowledge and apply it. You traverse from shelving knowledge to actually applying what you just learned. So the stock market is a very interesting place to invest. So I prefer investing in the stock market as opposed to that of crypto for reasons I just mentioned, which is it is more concrete. You have an understanding of what's going on in the company. They are actually producing something to increase market value. There's a CEO working tirelessly to double the amount of shares. So technically, Tim Cook works for me. I'm not saying I own Apple shares, and even if I do, I'm not encouraging you to buy it. I'm not advertising. I'm not trying to psychologically implore you to invest in Apple. No, that's far from it. I use Apple products, so it only makes sense I invest in products I use. So any purchase is profitable for me as an investor. So once I go out and buy the Apple device or the latest iPhone or an Apple monitor, it's profitable to me because I'm a contributor to my company. Most of you who have small businesses would agree with me. If there's an event, you try as much as possible to introduce your friend's talents. So the guy who sells turkey, the lady who makes hair, or who does facials, you try as much as possible to aggregate the talent pool in an attempt to benefit the various individuals. So your friends, you ensure they are part of that value chain. It's the same thing with the stock market. One of the first things you can do is to start investing in products you use. Also, another mistake most people make is they invest in something they don't understand just because it looks cool. For instance, you invest in AI without any prior knowledge of artificial intelligence. There is no shaming in saying, I don't understand this, therefore I would not invest. It's fucking abysmal because you're not close enough to the product. You have no idea when the bubble is about to burst. At the end of the day, you'll be left holding the bag. So take Apple for instance. Again, this is not me touting a stock for you to invest in. This is purely illustrational purpose. Apple for instance, I invest in Apple device, so I understand. I invest in Apple company. I use their product. I understand when the product is declining. I understand when people are not happy. I understand the review. I'm close enough to the product. It's like an insider getting insider information. In fact, this is a very good example. I just came off from the top of my head. Why would they lock other people in jail for having insider knowledge? Because they know the product too well and can predict the movements. Being close to a product is akin to you having insider knowledge without the knowledge of the SEC. So you're close to the product. This is an advantage for workers. If you're a worker in McDonald's, for instance, you're close to the product. You have an idea what people want, how seasons play. Or if I invest in Q4, which is around the festive season, for instance, a lot of people come to buy, which means the company reports stronger earnings, which means shareholders